Financial uncertainty continues for the island nation of Cyprus, but despite narrowly averting bankruptcy and securing a $13 billion bailout, the economic pain may be just beginning. Economists say the country will pay a price as it struggles to right its troubled banks. I am joined now by VOA economics reporter Mil Arcega for more on Cyprus. Mil, let's start at the beginning of this. Okay. How did this financial crisis in Cyprus come about?
Well, some would argue that the structural problems with Cyprus started way back after the fall of the Soviet Union, when Cyprus had ambitions of becoming the Switzerland of the Mediterranean. But I don't think you really have to go that far back. Just go back to 2008, the financial meltdown, which started right here in this country. Well, that plunged much of the world into a deep recession, Cyprus among them. But Cyprus hadn't even recovered when Greece started making headlines. So, as you know, Cyprus was heavily invested in Greek bonds. So when the EU actually forced investors of Greek bonds to take a 50% haircut, well, you know, the banks faced steep losses. Obviously, the government could not bail them out. And given the disproportionate size of the banking system to the Cyprus GDP, something like 7 times larger, right, the system is just simply unable to absorb the cost.
Now, you talk about the banks. One of the interesting things about the case of Cyprus is that this is the first time in a European bailout that bank depositors are being forced actually to foot some of the bill for this rescue package. So what does that mean for
Well, that's
the
the biggest controversy, but imagine what that does to investor confidence. Obviously, the moment you start taxing depositors, some of them will lose as much as 60% of their deposits. Well, that's bound to have a really deleterious effect on the investment climate for Cyprus.
Absolutely.
You know, people could end up pulling more of their money out.
Yeah, well, Mil, we want to take a little breakaway for a moment. We want to go ahead and take a look at some of your piece, and then we'll come back and talk more.
Sure.
For now, strict controls are likely to limit the amount of money going in and out of the country. And when business confidence suffers, so does job creation. Warwick Business School professor Harry Soukas predicts the jobless rate will skyrocket. He spoke to VOA via Skype.
Currently, it's about 14%. I think estimates have it that about 25 or 30% of the GDP is going to be taken out of the economy. And this is going to definitely double unemployment.
Professor Soukas believes the economic consequences could fuel anti-European sentiments, especially among those with more than $130,000 deposited in Cypriot banks. Some could lose up to 40% of their money, among them Russian investors who have used Cyprus as a tax haven for years.
And we are back with Mil Arcega. Mil, I think the big question with this is, will this $13 billion in bailout money actually be enough to get the banks back on track? And if it isn't, what happens then?
Well, it's really hard to say how well the banks will fare as a result of this emergency bailout and all these tax penalties. Really, time will tell, but I think the bigger damage, like I mentioned earlier, is to the country's reputation. If more people lose faith with the Cyprus economy, they'll end up pulling their money out. And keep in mind, parts of the terms of this emergency bailout also include really steep austerity measures. And so that will mean more layoffs, possibly cuts to civil service salaries, fewer government services and all that. But it's important to keep in mind that the general fear really is one of contagion. What if the fear, this insecurity, spreads to the other countries? Keep in mind that Cyprus only makes up 0.2% of Europe's economy. So its total impact is small, but there's only 1 million people living there, and the impact on them will be very great.
All right, Mil, well, thank you so much for joining us, sharing your insights on this issue.
Thank you.
Mil Arcega, VOA economics reporter. Thanks again.